Today on INI9, I have my co-conspirator at Takshashila and Geoeconomics fellow, Dr. Anantha Nageswaran. And we're going to talk about the value, or rather the devalue of the Indian rupee. So Anant, can you just briefly tell us why did the rupee end up at 52 to a dollar, 52 plus to a dollar, and why are we in this interesting position today?
Nitin, in general, it's a slightly fallacious answer, but also truthful to say when there are more sellers than buyers of anything, the value of that good goes down. So obviously, we know that there are more sellers of the Indian rupee than buyers, so its value goes down. But that is a rather sort of uninteresting answer, even if it is truthful. So essentially, there is unwillingness to hold the Indian rupee given the current levels of interest rate. I mean, everybody wants to hold a currency because it enables them to buy a particular basket of goods and services in that country.
Right.
Or it gives you a return.
Right.
But obviously, you might say, then why is the Indian rupee weakening? The interest rates in India are 8.5%, but in the US it's probably 0%. So
Right.
people should be willing to hold the Indian rupee.
Right.
The reason is, inflation rate is 12%. So negative return of minus 3.5%, right? In real terms.
Right,
In the US,
but the
yeah.
people, let's say it's the foreigners who are buying and selling the rupee. The
Yeah.
inflation doesn't affect them, right? Because they are not buying goods and services in the country.
Well, that is true, but normally what happens, absolutely good point. Yeah, if a foreigner puts money into India and he takes it out at the end of a 1 year, 2 year, 3 year period, how does it matter to him that the Indian inflation rate is 12 or 15 or 8 or 5%? That's a good question. But in general, if you look at any economic exchange rate theory, they would tell you ultimately the currency reflects purchasing power. And if there is inflation in that country, that currency's value is expected to go down over time. And that is what is happening to the Indian rupee, because the inflation rate in India has been persistently high for almost 2 years now. So it breeds expectations of currency weakness, and these expectations become a self-fulfilling prophecy, because the moment you start expecting the currency to become weaker tomorrow, you would sell it today.
Right.
And that is what happens. So the fundamental backdrop for this is persistently high inflation. That is one factor.
So persistently high inflation, again we know, or rather we have argued, both of us have argued, instead of using we, both of us have argued that a large part of the inflation is also because of the fiscal irresponsibility in the last 5 to 7 years, right?
Absolutely. I think that is the key driver. India's monetary policy, as they say, run by Reserve Bank of India, has been by and large exemplary. But it is the government's profligate ways of controlling expenditure is absolutely is not there. Not only that, there is a very little recognition that the real fiscal repair, or getting the budget to be within reasonable limits, has to come from the expenditure side. But what is happening is the government is now trying to move more items into services tax net.
Right.
So that they can raise more revenues.
Right.
But the problem is, in the last 6-7 years, they have raised a lot more revenues, but they have spent even more than that.
Right.
So it's really the spending side of the equation, the budget equation, that is the problem for India.
Right. But okay, now let's look at the implications. Right now, okay, the rupee is 52 to a dollar, so that should make our exports competitive, right?
Well, you're right, absolutely. In theory, I mean, as economists are always fond of saying, ceteris paribus. Everything being equal, yes, it is useful for exports,
Right.
but everything is not equal. Other countries are seeing falling growth. If they don't have money in their wallets, even if you offer them a big discount, they're not going to buy.
Right.
So the rupee weakening is like you, the Indian exporter, is offering a big discount to the buyer. But if the buyer is not having a job or does not have cash in his wallet, he's not going to buy.
Yeah.
So in that sense, that side of the equation becomes less important now. On the contrary, if a rupee weakens, India's imports become costlier. That, unfortunately,
Will also raise the inflation again.
raise inflation rate and raise the government budget deficit. Suppose the government decides, I'm not going to raise the end price of oil, crude oil, or not going to let the oil companies raise the end price of crude oil or petrol, then essentially the government will be paying more in rupee terms for the crude oil imports. So either the inflation increases or the budget deficit increases.
So Anant, are we in a vicious cycle?
I think the answer is yes. Until the fiscal problem is recognized first and controlled, I think we are in a vicious circle because we will continue to spend beyond our means, dependence on imports or dependence on somebody to lend us the money so that we can spend beyond our means can continue. And to that extent, the pressure on the currency to depreciate will be there, both from the point of view of foreign lenders or investors looking for more returns, or from the point of view of inflation. So, from both angles, higher fiscal deficit, inability or unwillingness to control government expenditure, and the resort to populist programs will keep the rupee under pressure, notwithstanding how many carrots we offer to foreign direct investors.
Yeah, and even if government makes a virtue out of necessity and say, no, we'll leave it around that range and we're not going to try and play around with the value of the rupee.
Yeah, I mean, the Indian government or the central bank at the moment does not have too many resources. Both of them do not have too many resources to, really dictate the value of the Indian rupee beyond the short-term intervention, which will probably stall the weakness over a day or two or a week. But really, it is the lack of confidence that the last several years has eventually now culminated in this lack of confidence in governance, economic reforms, and lack of confidence that the government of India understands the dangers of its policies for the Indian economy that has brought us to this pass. And unless that is recognized and addressed, the pressure on the rupee will remain for it to weaken further.
Okay. Now, I've been trying to make sense out of what this means in a geoeconomic sense, where the Indian economy is one of the several, where there's China, United States, Europe, and Asia, and Brazil, and others. Now, what does it mean if you look at a global picture where India is just one of the players and all others seem to have their own little share of problems?
Well, that is actually, in a way, to put it bluntly, therefore, it's a good time to have your own crisis. Okay? Because everybody else has their own share of problems, and therefore, to that extent, and to have a cheap currency to some extent, if what they started yesterday or day before with the FDI in retail being the first step, if that is the beginning of more serious reforms as we discussed earlier happens, then we are turning this into an opportunity before others are doing that. And one good thing about we must say is, with the Indian government, with the Indian problems, it is all out in the open. It is not the same with the Eurozone. Of course, it is not the same with China, and it is not even the same with the United States. So in that sense, I think the problems are out in the open. The financial markets, therefore, can price it in more quickly, and therefore some investors will find that the prices are now interesting to buy into India for the long-term story, whether it is equity investors or foreign direct investors. So to that extent, it is a plus. But if you don't address it, then certainly it does weaken our geo-economic and geopolitical position. No questions about that, because all this talk of Indian growth rates exceeding China's growth rate, which was what the Economist cover story was about a year ago, I think. I think that will get pushed out to by a few more years, and that will naturally have a limitation on your geopolitical bargaining power.
Yeah. Thanks, Anant. As usual, we'll conclude this. It's amazing. We'll conclude this by saying the answer is actually reform, reform, reform. There's no other policy mantra that exists which can capture the moment. But
exactly. And what reforms need to be done is very well known. I think it's just a question of Congress getting the will to act.
Or the desire to act.
Yeah, that's right.
Thanks, Anant. So we'll have more of this in future.